This is an analysis from Alpha Business Media. Welcome. Today, we're going to deconstruct the incredibly high-stakes economic challenge that Nepal is facing. And really, the best way to describe it is an act of economic vertigo. Let's dive in.
You know, this isn't just some poetic metaphor. For Nepal's central bank, the Nepal Rastra Bank, or NRB, this is their day-to-day reality. They are performing an incredibly delicate balancing act. And honestly, one single misstep could send the entire economy into a free fall.
So on one side of that tightrope, you've got this abyss of runaway inflation, the kind that just eats away at everyone's savings and their ability to buy things. And on the other side, a massive drop into economic stagnation, where businesses start to fold and jobs just disappear. This is the classic stagflationary trap. It's a really toxic mix of high inflation and zero growth. And the debate now? It's gone way beyond just interest rates. The real issue is a clogged financial system, where the old traditional tools, they're just not working anymore.
Now, you hear the private sector practically shouting for cheaper credit to get things moving again. But the core problem, the reason the central bank can't just flip a switch, is this deep, pervasive crisis of confidence. The whole mechanism that's supposed to get money from the bank into the real economy, well, it's broken.
So that brings us to the big question, right? If the central bank did make money cheaper, why wouldn't it just flow into the economy, create jobs, and get things built? To really get that, you have to look at both sides of the coin, the lenders and the borrowers. So let's start with the banks.
Right now, banks are basically operating out of fear, not ambition. They're looking at this alarming spike in non-performing loans, loans where people have just stopped paying. That puts huge pressure on them to clean up their books. So their focus is totally shifted from growing the business to just managing risk. And there's this really fascinating idea called the collateral trap. See, most loans in Nepal are backed by real estate, but the property market is completely flat right now. Banks have no idea what that collateral is actually worth, and that uncertainty just paralyzes any new lending.
Okay, now let's flip it around and look at the borrowers. A lot of businesses aren't thinking about expansion. They're literally just trying to survive. They're getting crushed by what's called a debt overhang from that easy credit boom back in 2020 and 21. Their main priority is just paying down old debt, not taking on new loans to invest. And let's be real, with consumer demand so weak and policy changing all the time, why would any business owner take a risk on a new production line if they're not sure anyone's going to buy their products?
So this whole crisis of confidence, it's really just a symptom of a much deeper and, frankly, more dangerous problem, a kind of structural sclerosis. It's like the economy's arteries are hardening, and you can see this most clearly when you look at two key sectors that are right at the heart of all this.
What's just staggering is how much one single sector dominates everything. Over 60%. Think about that. Over 60% of all bank credit in Nepal is tied to real estate in one way or another. For years, it stopped being about building homes and became the country's main speculative casino. And that just sucked a colossal amount of money away from more productive businesses.
And this has created a huge problem called zombie assets. We're talking trillions of rupees just locked up in overpriced land and half-finished buildings. They just sit on the bank's books, making no money, but the banks don't want to foreclose because then they'd have to admit to massive losses. So all this capital is basically held hostage, and it's paralyzing the whole financial system. For you and me, that means while trillions are frozen, a small business owner who needs a loan to expand their shop gets told no.
And you can see the results pretty starkly right here. While the real estate sector was gorging on all this cheap credit, the productive heart of the economy, manufacturing, was basically being starved of cash and just left to wither on the vine.
If you talk to a manufacturer in Nepal, the interest rate on a loan is often the last thing they're worried about. The real roadblocks to growth are way more fundamental. We're talking about crazy expensive and unreliable electricity, really rigid labor laws, the logistical nightmare of high transport costs, and a bureaucracy that's just impossible to navigate. These are the things that are crippling industry, not an interest rate that's a point too high.
And that brings us to a really crucial point. The inflation Nepal is dealing with is mostly cost push. It's driven by supply problems, things like import costs and domestic inefficiencies. So using monetary policy, which is a tool designed to manage demand, is like trying to perform delicate surgery with a fire hose. Sure, it's powerful, but it's the wrong tool for this specific job, and it ends up causing a ton of collateral damage. So what's the way out?
Looking ahead, Nepal's policymakers are at a crossroads. They're facing a choice that's going to define the country's economic future for a long time, and there are basically two completely different paths they can take.
The first option is the path of least resistance. We'll call it the muddle-through scenario. The second is much harder but could be completely transformative, the path of structural realignment. Let's break down what each of those actually looks like.
So in the muddle-through scenario, the central bank caves to pressure and just slashes rates. At first, you get a temporary, superficial sugar rush, a little bump in spending. But that quickly leads to a surge in imports, which drains the country's foreign reserves, and in the end, it just reignites the very same asset bubbles that got us into this mess in the first place, leaving the economy even more fragile.
The alternative is that fundamental structural realignment. This is the hard road, but it's the one with a real payoff. It means the central bank has to hold its nerve while the government actually takes the lead. We're talking about courageous reforms, like setting up an asset management company, a so-called bad bank, to finally deal with those zombie assets and free up all that trapped capital. It means the government has to get serious about creating a competitive industrial sector with things like guaranteed power and special economic zones. And it means the Ministry of Finance has to step up with smart, high-quality public investment that builds a real foundation for growth.
As you can see here, the governor of the Nepal Rastra Bank is basically being asked to use a screwdriver to hammer in a nail. For way too long, Nepal has just relied on its central bank to fix every economic problem. Well, that era is over. The burden has to shift. So here's the bottom line. The tightrope walker is getting tired, and that balancing pole is starting to bend under the strain. The most important economic decisions for Nepal's future, they're not going to be made in the central bank. They're going to be made in the ministries and in the parliament, the places that have the power to make real, deep, structural changes. The only question now is, will they choose that difficult path of reform, or are they going to risk the fall?